President Akufo-Addo has charged financial institutions to increase credit facility to the agriculture sector. Speaking at the presidential breakfast meeting on agriculture and agribusiness, he expressed concern about the poor credit culture to small businesses, especially those in the agri sector. According to him, the average of 3% financial support to agribusinesses is woefully inadequate and must be increased. Access to financing is vital for the growth of the agriculture sector in Ghana, mainly for working capital such as acquiring inputs, hiring labor, as well as for fixed capital acquisitions such as machinery. The absence of financing limits the average acreage of cultivated farmlands and thereby impedes agricultural growth, with consequences for the economy as a whole. President Akufo-Addo, in an engagement with players in the financial sector, tasked financial institutions to increase agricultural financing to grow the country's GDP.
But together, we have to make an effort to break out of the structures of our economy that we've inherited up to today. Because if we don't, we will be still continuing to scrabble around at levels of growth that are really not a reflection of the potential of our people and of ourselves. The relative apportionment, 34-35% credit goes to the service sector, 11% to manufacturing, 3% to agriculture. These figures don't make sense for an economy that wants to grow, that the real sectors of the economy, the sectors that have the capacity for dynamic growth, not just of the economy, but also in the creation of jobs, are the ones that receive the most amount of money from you.
Meanwhile, Deputy Minister for Finance, Abena Osei-Asare, outlined some initiatives the Ministry of Finance is undertaking to ensure increased support to agribusinesses.
The growth strategy which government is currently financing is targeting to improve access to long-term financing for capital investment by private sector. We use the private sector to leverage on the strength of the financial ecosystem built around the Development Bank Ghana, GERSEL, Ghana Exim Bank, Venture Capital, and the Ghana Commodity Exchange. We have worked with our international partners and the Bank of Ghana to set up the Development Bank Ghana to increase availability of wholesale long-term funding. This is to enable our banks to offer long-term retail loans without creating maturity mismatches. And that is very, very important. And that is the reason why our bankers are talking about patient financing.
Minister for Food and Agriculture, Dr. Brian Echampong, stated that the Planting for Food and Jobs Phase 2 will make Ghana food secure and resilient by 2028.
The Planting for Food and Jobs Phase 2 is a clear strategic objective, and interventions for agriculture that will deliver food security and resilience within 5 years. We can boldly say and boast that in 5 years we shall be food secure and resilient. Indeed, some of the annoying and embarrassing narratives, like importing onions and tomatoes from our Sahelian neighbors, will be reversed sooner than the prescribed 5 years.